Raj Bhatt of Elara Cap is joining us right now today. Raj, thanks so much for your time. Lovely to be chatting with you, and thanks for taking time out for us from your personal time this time. Talk to us the worries which are really impacting global markets and Indian markets uh, of COVID, of inflation coming back, all of that. Despite of we and commentary coming over the weekend that the new variant may not be very lethal, it appears market is in the mood to correct and go sideways. How are you analyzing things?
I think you are absolutely bang on. I've been traveling, but I keep following the news, the markets. I get commentary from my office, and I think variant was just a correction had to happen. So they had to find a reason. And personally, I knew when this happened Friday that because markets have been moving in one direction, and there's so much liquidity in the market, and they have been driving prices. I'm not saying all sectors, all companies, but there are certain sectors which are, you can say, overheated. Certain companies which are overheated, valuations are stressed. So because it's all got to do with the pandemic. What happened when people were sitting at home and they had nothing to do. So there are a lot of retail participation. I'm talking about West particularly because there's so much free money was given in US, Europe, UK for not working. And they didn't have any other outlets like going to clubs, hotels, holidays. So I think a lot of retail participation has gone up significantly. And I think the valuations are, according to me, I'm not saying all sectors and companies, but we are seeing correction is there. And I am very confident this is not over. We need one more, two more triggers. Maybe the inflation could be triggered. Maybe Fed has to move early. Maybe the tapering is faster. It could be any other reason. The market is looking for reason to correct, and the new variant was a good reason to correct, and it corrected. And I'm sure that some more correction will overdue, because if it doesn't correct now, it will correct 6 months later. Because you can't have valuations which are traditionally it looks expensive in the market.
Raj, you're also someone who keeps a very close watch on policy, reforms, all of that. And somehow market did get a bit nervous after the government going back foot on farm bills, the 3 repealment of the farm bills. One is getting a sense that does it mean that the government is on the back foot? Could other reform, at least the pace of reforms could slow down again? Is that a legitimate fear or not worth it?
I think this is all got to do with the point is there was no way out for the government when somebody is so stubborn, and and the elections are around the corner, and only way to avoid confrontation was just give in. I don't think it was a economically good move, but I think politically it was a compulsion. They had no option, I guess. Otherwise, what was the option when somebody is saying no, we're not going to accept anything other than removal of these laws? So saying that other things, they will roll back something else. No. I think India is medium to long term on a very, very strong footing. And we will see the Indian valuations also, because they're backed by a lot of earning growth. And earning growth might taper off slightly, but I think certain sectors will continue to enjoy. We see a lot of companies repaying their debts early, the cash liquidity is higher. India also has the same phenomena like US. A lot of retail participation now, and retail participation comes towards the end of the bull market normally. And so I personally feel the correction is overdue, it will happen. But the secular bull trend is intact in India. I don't know about other markets, but if somebody is going to invest for 3, 5, 10 years horizon in India, I'm sure a lot of money to meet.
It may appear big in the broader markets, but on the benchmarks, they've just come down, 7-8%. And par for the course, it appears par for the course if indeed we are in a big economic expansion phase, and bull markets may follow that economic expansion. Do you think that there is a very strong case for next 3 to 5 years of structural earnings recovery, economic expansion, and hence market will come back after 6-8 month hiatus?
I'm not out. Right now, what has happened, the reforms take place, and the reforms have taken place. They normally benefit the larger companies. So we've seen strong profit growth in blue chip, large caps, and it takes 2 to 3 years when these impact of reforms starts hitting small and medium enterprises. So mid cap, small cap, they have not had really benefited much out of the government reforms, but it will follow through. So again, I'm maintaining, take a 5 years view in India. You can invest today also. There's companies, sectors which are not expensive in India. So, if you take a long-term view, you will make money. And I've been telling people all over that India is the place to invest. And we will see phenomenal growth. And when the momentum is behind the growth, I think it continues. So I'm very positive about India. But we will have correction in Europe and particularly US, where the markets are really run up. And it is driven by the retail participation. And so there could be major correction. And then if the global markets correct, India will correct. But India will bounce back fast.
Right. Raj, last time we spoke, you were quite bullish on this entire PSU pack, be it PSU banks, defense companies, what have you. And we did see a very good move in that entire space. It was under-owned as well. Do you continue to remain bullish on the changing nature of Indian PSUs, much more efficient now? Which pockets look attractive to you?
PSU and metals. Last time I was with you, I said metals and PSU two sectors were very bullish, and we invested in these two sectors. And they have, metals have done globally very well, and they are driven by the more global demand than Indian demand. So PSUs are still undervalued, and but only thing I see with PSU is the problem of they are not growing the lending book. Lending is not increasing as it should be. So we are PSU. We are looking at larger companies like State Bank, and we are doing our fund is different. We take some propositions. So we accepted State Bank as a good run. I think 95% of our holdings were sold, and but I think there will be a time when these prices might correct because of the overall global reasons. So longer term, definitely yes. Like you look at State Bank, it's gone double and some other banks also you have seen a good run. So I'm still positive. We are still holding PSU positions. We've not exited everything. And if you take 3 to 5 years, definitely one will make money because we are seeing gradual.
How's the part of your business beyond the active management, your fund, or even transaction advisory on your institutional side? But what about deals? How's the investment banking part of the business doing? What kind of conversation are you having with clients? Where is the interest? Give us some flavor on the investment banking side.
Yeah, broking is we do only institutional broking. I think broking has really stabilized. We're doing extremely well in broking side. Investment banking is because people like us, it takes a little longer to get into the deals. But we have signed about 4 or 5 IPOs in India, which we will be launching in the next 4 to 5 months. And we're doing some fundraising for new sector, electric vehicles and all that, which are new kind of sectors. And some PE transactions, very well established. Investment banking will follow suit. And first time in India, we're making decent amount of money. We've been investing in India for the last 15 years. And I'm sure investment banking is more like it takes a little longer. And our research is, I think, internationally, globally, I talk to people and they really like our research products. And that's why we get more business growth. Yeah.
Right. All right, Raj, we'll let you go on that one. Thanks so much for your time joining us today on the show.
Yeah.
With that, time for a short break. More news and analysis on the other side.